Hey guys, welcome to Thursday, the 28th of April, 2022. And really interesting day yesterday on equities. Um, you know, we'd had a pretty decent push down on Tuesday. Wednesday, it seemed to be kind of pulling up the reins and kind of getting us back up there. Some decent earnings after market. Well, really, actually, good subscriber numbers out of Facebook, up 15% in the pre-market now. I think that is certainly providing the lift that we've seen so far on the Nasdaq in the European session. We're up 1.8% pre-market right now on the Nasdaq, 1.32 on the SPOOs, and 0.75 on the Dow. It's just pulling off of the highs of the session so far. I think I was reading some good articles about oil at the moment, and namely just talking about there's just such big elements pushing and pulling oil at the moment that it's just really probably best to kind of stand out of the way until we kind of get maybe an easing of the lockdown situation in Asia, and then we can start to see demand come back online. But until then, you're just going to see, slackened off demand in Asia, fighting with, the Russian situation, fighting with, they kind of counteract each other. And then you've got the SPR release that's kind of completely wiped out by the Russian situation, the lack of production there. Some people are not aware that we are facing into a deficit of 3 million barrels a day now in total for April out of Russia. So, that's quite a big deal, and that does completely negate and then some the IEA SPR, US SPR releases and their partners. So, probably, look, we're looking at oil holding above $100, the defense line since yesterday and this morning, really, for oil. I think we can get to 104s. But for now, we have kind of gaps open below on equities. I think we need to kind of sort out some business on the downside before we can then start working back up in quite large ranges. I'm going to show you here on SPOOs and Nasdaq, which I've shown you yesterday and the day before. So let's get on over here and look at the chart. So, the euro continues to be absolutely decimated. The euro index, that is, by the dollar index. I don't think there's any buying until 1.03 175s. That doesn't mean that you can't, get into some nice little position trades. Like this morning, people trading euro USD, taking some longs. Very technical stuff going on. This is the euro index, not the euro USD we're looking at here. Just to give you kind of scope of what's going on. You're looking at a weekly chart here. This is the weekly chart, right? Now going all the way back to basically 2001. The euro did go into circulation in 1999. And we're down trading pretty much in the lower zone here. Let me just take my mug off the screen here. So we're kind of trading into these levels at the moment. The 106 is here. So kind of, currently we've departed this area, which was kind of the high of the 17th of September 2001, right? And so we're dropping down through this area, down through this demand area here. All right, so next support is the 1.03 175s. Maybe you might, have a little pull of the reins here at 1.04 thousands. But generally, I think the bigger support is going to be that double tap low of March 2000. So it was a good year. Anyway, that's the euro. Some big depreciation on the cards there. The dollar index. A lot of people calling a top on the dollar yesterday, this week, as we traded into this mega downtrend. The mother downtrend is what I would call the highs of 2017, linked on the highs of 2020. And we've absolutely just blown through here on this target, which has been a target for me for actually since the start of this year for sure, finding supports on the mother uptrend here. And then up we go. So using a fib extension level, I think, we can probably target 105 spot 36.96 on the upside here. But a lot of technical stuff there, really. But I just don't see the dollar topping out anytime soon. Now to look at equities. So Nasdaq on the daily chart first up. Well, we're in this range as I had talked about since last week and has been on my charts for quite a while. And sure enough, finding supports on the bottom of the range this week. Yesterday, actually finding the supports here on the open, well, an hour after the open, 12,939s, right? And then here we are up high of day currently at the 500 daily exponential moving average, right? That's a big, big, big level. And you've seen, some fantastic buying coming in off that level there on the 15th of March this year. So, I think now we're trading below. We can probably be met with a headwind here. I think you can see the gap below, and I think we, as I was saying, we do have some business to do in closing this gap. So you may comes down, hits into pivot, bottom of the gap, 13,029s, and then you get that reversal and back up strength through the 500. But for now, the bears are in control. And let's see if they can control this back down on the range. I think another breach on the 12,939s and 898s here. That's no good. And breach here is going to lead to much lower prices. So if we kind of come back across on this range, the next stop down is going to be that. Sorry, hold on. I'll just get this level on. The 12,593s and a half. So, we're a long way from the top here. Chart calculator on where we trade right now. We're 21% off the highs, officially a bear market. All right. Looking on the SPOOs. SPOOs was actually really good yesterday. Both the bulls and the bears in our room making money on this thing, which was fantastic. So, really, what we've been looking at was generally this sort of this sort of uptrend on the day, and some big levels here coming into play. That was just after the open. So we had about a 1% opening drive. Actually, if I blow this up, and you can really see, there was an absolutely huge amount of excess on this opening drive. 1% up, came all the way back. So the bulls buying this. I was a bear on this, selling it down, and then when we were kind of 3:30 marker, right, we went back on up, finding supports on that 42.04 quarter, temporarily back. So real wish-wash of a day on the SPOOs, but generally uptrending, holding the uptrend. Now we have this gap up open here on the market. Tried to close earlier on. You can see that here. Tried to, just stay in there and drop. Didn't do it. So you can see here, 6 a.m. driving from the gap top up into R1. So now I think we just need to kind of come on back down here and close this gap. I can't see this gap being left open for too long. It's very tough trading around here at the moment on these equities. So big companies to announce earnings. As I said earlier to the room, we're looking at today Amazon, Apple, Intel, Twitter. We've just had Twitter, and MasterCard, and McDonald's, all to announce earnings. So some not insignificant companies. Of course, the biggest of them all, Apple and Amazon there. So would kind of watch out for what may come there. I can't see Amazon having a bad quarter, to be honest. But who knows? We have even, what we've seen as well is, people selling down on good earnings quite a bit here. So, do be aware of that too. All right, just peeping in on the Dow before we head off here. Just peeping in. The resistance is still up at 33,717s. But there's just this little shelf you can see this morning around the R1 that I've been tracking. Lovely selling off of that yesterday. If you're trading at 5:30, back down into the range on the day and then closed. No gaps left out on the open here on Globax on Dow. So for me, I don't know. I think I'd prefer to wait and see what happens at 33,717s. and actually get these earnings out and see how the market wants to react to that. Of course, now we are going to get in 12 minutes time GDP for Q1 out of the US, set to come in at 1.1% for quarter on quarter, prior 6.9%. And initial jobless claims set to come out 190,000 as well. So both tier one data events coming up. All right. So yeah, I mean, look, I think it's very hard for me to see or not see this trend come into play here down on the Dow. You know, if we are going to get, I think we're just in the middle of nowhere right now. And if we are going to get higher prices at any point, well, it's going to be a touch here, find support, and then we rally. I think we're a bit too early to be calling mega pushes like in range, expansion on the range on the year at this point. So, just taking the near term areas. I think gun to my head, I'd like to be long this market, but we're going to wait for earnings today. All right. Oil, not really going to talk about too much about oil. We are supported, as I said, on that $100 marker yesterday coming into play. We have, 100 spot 30 is a technical level for us in the elite group, and that's certainly coming into play with the 100 just 30 ticks in the difference there. But we're stuck in a range, 2-day range right now. Ultimate target up here is 104.12s. That was I think a double top low from 2015. If I just it is. It's a 2015 level. So yeah, I'm not too fussed about trading oil at the moment. As I said, it's just really a complex picture. But ultimately, I think the bulls should be owning this thing right now. And as I'm talking, you're seeing T-notes headed to the downside. Gold following suit. Nat gas, not a biggie here, really, to be honest. I mean, I think generally the bulls have nat gas now, and I think we could be going as far on this M22 contract is 7.6, and above there you're talking the $8 handle. So I think that's suitable. And then cable, there's no refuge from this dollar. I really don't know where cable's going to stop at the moment. It's a temporary support so where we are right now. And you're already getting new highs on the Dixie as I've been talking. So, okay, that's it for me for another pre-US session. Have a good one, and I'll talk to you tomorrow. Cheers.